Good evening, traders. Mark here from the Day Trading Room. Time's approaching midnight on Wednesday, the 2nd of November, and it's been a while since I've done a video entry into the blog. And that very good reason for that is that I have taken very, very few trades. Um, Nothing special at all. No spectacular winners, no dreadful losers. Just really scalps. Um, just while the market transitions from the extreme volatility in August, September, to this more up and down phase. Obviously, news is driving a lot of the European news at the moment with Greece and what have you is making the market very jumpy. But in between those times, we're tending to get this drift. We're tending to get a little bit of drift, low volume. I mean, today, first 15 minutes, we had almost, I think it was 20 points of range on the YM, unheard of for months. Unheard of for months. In August we'd do 100 points, on the first 5 or 6 minutes. But anyway, as traders we have to adapt, and so as much as I would love to be trading the blow off continuation, pullbacks, pauses, great, those nice low risk, great reward trades that have been working so well. Market moves in phases. It has different rhythms, it has different ways of trading. So as traders we have to adapt. And so this past week or two, I've just been spending time while they're trading. I've not been trading as much. I've just been sitting here. I've just been taking notes. I've just been looking at the market. I'm there to pounce on continuation trades, and actually the last hour has been the best in terms of taking those trades. As everyone sort of runs for the door and doesn't want to be caught overnight for any European news, any Americans want to be caught overnight for any European news. So the last hour has been offering the best opportunities as opposed to the first hour, which used to be the best in August, September. But anyway, so that's really how I've been trading the last hour more aggressively than the opening hour. But the most important thing when the market is transitioning into a different phase, and I'm not saying we're not going to go back to volatility. Anything can happen, but we need to be prepared for less volatility. If we go into the end of the year with uncertainty or just less participants in the market, then we're not going to get those continuation trades that I talked about so much in the previous videos. And so it's time to dust off old setups that work in those range bound markets, and rather than just going straight into them, because transitioning from one extreme tape to another takes time, and you don't really want to dive straight in. So spend a bit of time. That's what I'm doing. Spend a bit of time doing a bit of analysis and just looking, see what's working, see what sort of where the market pushes to, where the reversal points are, how it's trading. And just a few things I wanted to share really with you, observations, and maybe you can implement them into your own setups. Maybe you've got some observations that you'd like to share. Feel free. I've been looking at the opening print at the moment. Now the opening print seems to be bearing a lot more weight than it used to. Before it would be the close, the high, the low, yesterday's high, yesterday's low. Those were the big ones. The open was almost irrelevant. But as the market becomes more rotational, more probing highs, probing lows, the open becomes much more of a key level. And I look at a 5-minute chart here on the Dow, and take the drawing pen off, don't need that. Just as an example here, this is a rough opening, by the way. I'm just moving this manually, this line. There's the open, and you can see how really we only started to push higher once we consolidated and above that open, and then continue to push higher. You can see here it became resistance as we broke through, a little bit of a pause. So pretty key. And also in the afternoon or in the evening, if you're London time, really acting as support. Day before that, excuse me. Again, open, great little level. You can see later in the day as we pushed up through, it acted as support. Lots of interest around that level. If we look at the day before that, again, I know it was actually the high, so there's a bit of a double whammy there. Zoom in a little bit better on that if we can. But again, very interesting level. Struggle to break above it. And so when we struggle to break a level, what happens is, obviously we know we can't break through a level. Bulls get impatient, sellers get a little bit more active, and then we saw that downdraft. The same again the day before. Let's have a look what we've got here. There's the open. I know it's a low of the day there again, so it's a little bit different, but again, holding. Let's have a look again the day before. I don't even know what these look like now. I'm just going with the flow here. There's our open. Oh, you can see exactly similar pattern to we had several days after that. The breakthrough, the hold above that built a base and then pushed through, and that became a little miniature trend day. Let's have a look at this one here. There's our open. Obviously, that again, that was the high of the morning, so that acted as quite significant resistance, and we couldn't really break through it that significantly. Let's just do a couple more just to see where we are. There's the open again, the high of the day. You can see very much significant resistance there, and the day before there. So, yeah, in summary, open. Mark that on your chart and look and use that actually now as a key level to work from. Another thing from the open. See how the market drives away from mean values, if you like, and you can almost call an open as a mean because it's an agreed price at the open, where especially when we've had news overnight in Europe and we're opening, we're waiting for more news, it's almost an agreed level that everyone has had time to digest, and then the market trades from that point. So everyone's using that as a bit of a pivot point. So it's worth watching, how far do we get away from levels like that open, levels like the VWAP, before returning. And actually we're getting almost a symmetrical pattern here. There's the open, there's the VWAP, pushes above, can't find any more buyer's interest, rolls back over, consolidates again around the VWAP, and then tries to probe below, again finds no interest, pushes back up. It's that sort of trade. We got that again the day before yesterday. There's our open and our VWAP, probe above it, looking for some sort of topping pattern, coming back, consolidating a bit of the VWAP, and then again probing, not getting too far away before wanting to come back in. How do we utilize that? Well, look at our ticks. Let's have a look at our ticks, see what the ticks are doing. How far away from the open are we getting? How far away from the VWAP are we getting? And then look for potential bottoming or topping patterns once you have deduced that potentially we've overstretched ourselves. And that only works in a range bound market, rotational range bound market. So don't start doing that in a trend day because that's where you get caught. But just a method, something to look at for these rotational type Z days, whatever people have got their own words for them, type of days. Okay, so that's that. Another little thing I've looked at here, and I will share this with you, is and actually one of the traders on the mentorship asked me about the ticks and using a Bollinger and a Keltner, and it's actually a great idea in this sort of market. I'm not an indicator fan. If you've looked at any of my videos, not a huge fan of indicators, but I don't mind using them if they're guiding you to something that you've already spotted. So if you think that you'd need an indicator to help you choose a setup that you'd already take, that's fine. What I don't agree with is when people put on an indicator and then look for a setup based on what that indicator is telling them. If you do it the other way, you look at price and then you think, hey, hang on a second, I think I've spotted something there, and then using some sort of indicator to help guide you, should I say, then that's absolutely fine. So anyway, here's the setup. Let's share it with you. It's really a scalp to get the last juice out of a move, and these are the criteria. Okay, I've got a Keltner here on the ticks. I'll have a look at the settings. I think they're on standard settings. I'll look at those in a minute. And really what you're looking for is when the midpoint of the Keltner goes above 500 on ticks or below minus 500 on ticks, we're looking to buy a pullback to the bottom Keltner if the mean is above 500, or we're looking to sell a pullback to the upper Keltner if the mean is below minus 500. So example here, we've pushed up, the mean is now above 500. There's the 500 mark here, you can see it here, the minus 500 here, the mean is above, so it's activated here. We hit the lower Keltner here, we didn't quite make it there, I know, because I took this little scalp, and there's your buy level there. Not much in it, but that's the point of the trade. The point is it's the last little bit of juice from the trade. One more setup trigger today. The mean goes into the lower part under the 500. We get a pullback to the upper Keltner around here, and then we get a rollover. And exiting, that's entirely up to you. You manage that as you see fit. Scaling, using the mean as an exit point, using the whatever you want. You can sort that out yourself. This is just a guide. I'm not suggesting you use this as a trading strategy. It's just a guide, and you can develop a strategy perhaps from it. The day before that, we got just the one signal actually. Uh, the mean then went under the minus 500, pulled back to the upper Keltner here. You'd have had to take a little bit of heat on that one, but they rolled over nicely, and that would have been a nice little profit. Second one, this here pulled back, but actually yes, you would have taken that trade. Yeah, you would have taken that trade, and no doubt would have been a stop out on there. So that's one stop for the strategy. One thing perhaps you can integrate is when the mean starts to come back into the 500. You look to scratch the trade. You really want to only be taking the trade when the mean, or the midpoint of the Keltner, is well above or well below 500. So it should be back to the Bollinger while that mean is still in the zone, if you like. There's the zone and there's the zone. So not bad so far. Let's have a little look. I don't even know what we're going to find when we scroll back here. Looks like we've got one little setup there. Just about, you would have just about taken that. Let's see if that one worked. The mean goes into the lower part, minus 500. There's your pullbacks here to the upper Bolly, upper Keltner, around that sort of level there. Perhaps a little bit of heat. I say nothing's perfect. This is just a bit of a guide, and then there's the last bit of juice from the trade. So that was a good one if that worked out for you. Let's do one more and then we'll move on. No setups there. The mean of the Keltner didn't break the plus or minus 500 on the ticks. Here we've got a little good one here. This is sort of the premise of the trade. With the last juice of the trend. We broke up above it here, so we're activated here. Lower Keltner there. There's our buy point, and then there's the last. Looks like 30 points of the trade. So anyway, something to think about, something maybe to utilise. Scalping, last little bit of juice. Finally, last thing I want to talk about is money management. I'm adjusting my strategy very, very slightly now, and what I'm doing is two things. One is adding different trading strategies, so a lot more fading coming in now, a lot more looking for extreme ticks, a lot more looking for extremes, double bottoms, double tops. When we've moved a long way from the VWAP, and we've moved a long way from the open, when there's no volume, when it's a rotational day, when the ticks are extreme, then looking for that double top, double bottom pattern. So all coming together for some sort of counter trend trade. A little bit more risk in that, so reducing the size accordingly. And the other thing is money management. When I'm taking any continuation trades I'm taking, I am now scaling far more aggressively on my first scale, looking for a little bit more, and reading the tape a little bit more rather than the arbitrary 10, arbitrary 10 ticks. But I'm now looking to scale 2/3 on a continuation trade, unless it's really extreme volume. But we haven't had that for a while, apart from a couple of closes, which have been quite good. But generally, I've adjusted my money management strategy to suit. So continuation trades when in rotational type day, looking to take the majority off on that first scale because the likelihood of us turning is quite high. If I'm taking a counter trend trade, then I can afford to look for further targets back to VWAPs, back to opens, back to sort of midpoints, back to supports, resistance, whatever. But position size is reduced on those because timing those is a little bit less of a fine art. You've got to give it a little bit more room, so I like to not risk as much in that, so I reduce my position size. So that's a bit of a summary of what I'm up to, how I'm viewing the market, what I'm looking at, some ideas perhaps to take away for your trading, to integrate with your trading. But most importantly is, we're trying to adapt here, and we could go back to extreme volatility, and if we do, we'll roll out those setups that are working so well for us in August. You could afford to, you can be a little bit chasing almost in August, and it will go another 50 points for you, and you got away with it. You're not getting away with this market. You have to really pick your spots. Be careful if you're looking to go with a trend that you think. Then just wait for that unwinding. Wait for that. If you're going to use a Keltner or a Bollinger on a tick, just wait for a little bit of unwinding and sort of work an order like that. And if you don't get it, you don't get it. You're going to miss a lot of trades in this market, but it's better than chasing. Better to miss a trade that you're working a bid or working an offer for than chase and be stopped out. So that's the way it is, guys. Obviously, European news is just driving this thing at the moment. Our last thing I want to say is please manage the risk. Put a hard stop in. Even if it's at an arbitrary level, monetary level, doesn't have to be above a high or low or anything silly like that. Just so that if something happens, some news comes out, extreme news that people aren't expecting, that you're at least going to limit the damage. You're at least going to limit the damage. Don't rely on yourself to take you out. You just don't know what's going to come out. So just use a hard stop, even if you don't use it to take you out of the trade under normal circumstances. If it's there as an emergency, it's well worth putting in. Well worth putting in. So that's all I've got for you. I hope you find it useful. Just wanted to say thank you for all the feedback to those traders who purchased the tape reading program. Really appreciate it. Love the great feedback. Everyone's been so kind with the comments, and I'm glad that you've enjoyed that. So if you've downloaded that and you haven't yet sent me an email with feedback or any ideas for future stuff, then please do. And yeah, sold out of the USB sticks. Got some more in now, so they're back in stock. So if this interests you, go and have a look. If not, no problem at all. Okay, manage risk, guys. Just take it steady. Don't get caught up in the chop. Don't get exasperated or frustrated. Just relax. Take a step back. Use a higher time frame charts. Just look at what the market's trying to do. Try and visualize what may happen and position yourself accordingly and manage that risk. Okay, take care. Back with another video. Hopefully we'll be a bit more active with the videos now. Different strategies being employed, obviously, but we'll see if we can get some more videos out there over the weekend, or if not, early next week. Okay, take care.